Good day, VV Nation, and welcome to the VectorVest International Online User Group Forum. It is November 2nd, 2024, Saturday, bright and early for some, 11 a.m. Eastern Time here. Folks, thank you very much for deciding to spend some of your weekend with us. As usual, this is on the VectorVest YouTube channel. So please make sure your computer speakers are turned on to hear the audio portions of this webinar. And for everybody, the recording, because it is on YouTube, will be available right after the webinar. All right, let's just take a look and see. I saw the chat was fairly active already. So let's see, I see people are coming in. Hey, Terry, good to see you out there, Terry from Sarnia. Greg, so anybody asking about the slides, if you'd like the slides, you can email support and request the slides. The slides are provided on a per request basis. Hey, Paul, good to see you from Ireland. There's Stuart from Calgary, Alberta. Good to see you as well. We've got Glenn from Lethbridge, Hans from Aurora. There's Lawrence, BC, I believe, Lawrence. Blaine from Cabo San Lucas, Mexico. We've got Sal from New York City. Robert, Southport, North Carolina. Rajan from Montreal. Let me start going. So Jerome, Naples, Florida. Hope everybody's staying safe and healthy all over the place, but we know Florida's been hit as well as North Carolina recently by storms. Tom, good to see you from Burlington. There's Richard from Maryland. We've got Mark from Ottawa. Marty, the governor from Toronto. All right, hey, Tony from the Ottawa area. I am broadcasting from the Ottawa area. Ron will be from Ohio. All right, we've got Whistler, BC, Aiton from Israel. There's Antonia from Montreal, Vivek from Boston. Hey, Otavio from Brazil. So definitely international. There's Erwin from Saskatchewan. Sunny day there, he said. Oh, we've got Tabula from Beirut. And another, so Chipadan from Florida. All right, so as usual, we do have a lot of content to cover. Hopefully everybody's feeling good, feeling welcomed out there. Let's advance in the slides. Here is our risk disclaimer. As everybody knows, there is risk in investing. So everything you will see in here today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so with that out of the way, let's take a look at the agenda. Once again, folks, Rick Franklin with you. It's my pleasure to be able to host this event again, and we'll be covering a global market review and trade ideas. And then we will be joined by none other than Mr. Ron Wheeler, Manager of Options Trading here at VectorVest for the keynote presentation entitled Strategic Entry Points for Blue Chip Stocks. So, of course, Ron doesn't need any introduction really in the VectorVest world. Anybody who joins his sessions in the URS coaching group for SPX training or any of the options trading debit and credit spreads knows very well that Ron is very passionate about this business and an excellent instructor. Over the years, I've learned so much from Ron. It's just incredible. Always good to be able to listen to Ron break things down. All right, so we'll be looking forward to that. Let's continue moving along here. And we'll start with the global market review. And we have seen, I was starting to wonder how things were going to play out coming up to the US election. We know that that's just a few days off now. The 5th of November. I thought they were going to run the markets right up into the election. That's the way it was kind of looking, but we can see that they kind of started tailing off a bit. So let's take a look at Canada first. Here you can see the color guard for Canada. You can see, so Canada had a string of confirmed green lights going not that long ago. We just have two left up on the board here on the extended version of the color guard, and you can see the red lights starting to creep in after quite a string of 3 yellow lights. There would have been more red lights in this area, but the VectorVest rules stop those red lights from coming through. But you can see the 31st of October, we got our first 2 red lights, one in the price column, one in the BSR column. As usual, you will see when we go through the color guards here, we've had quite a bit of jumping back and forth. That's continued, especially in the BSR and the MTI column. All right, but for Canada right now, you can see we finished off Friday with 3 yellow lights. Our MTI all the way down from 142 to 1.09. We are in a down up situation. All right, and year to date, the Canadian market, the Canadian VectorVest composite has returned 15.24%. Here's the roundup of our proprietary market timing signals for the Canadian market. You can see the confirmed calls and the DEW remain up all the way from back in August. The green light buyer turned neutral on the 21st of October, and we just lost the primary wave. A little bit of whipsawing going on there with the primary wave. We just lost the primary wave on the 31st of October. Moving on to the US. Here you can see the US color guard. You can see both of those, the Canadian and US market. The market timing gauge needles are straight up into the yellow, and the guidance is exactly the same. It reads the color guard is neutral. VectorVest does not advocate buying any stocks at this time. You can see on the US side too, they ended with 3 yellow lights Friday, and you can also see how quickly the BSR and the MTI have broken down in the US market. You can see with the extended version here, 1.94 just on the 18th of October, and we're looking at 0.67 as of Friday's close. The MTI got up to 1.45 and is at 0.96. Now in the US, they are in a down situation. So short-term downtrend in an underlying downtrend for them. You can see Canada still in the down up. All right, and the other notable change on the US side is they did lose the confirmed call on Thursday, 31st of October, and the DEW. All right, so quite a bit more red in our market timing signals already on the US side. So you can see the green light buyer and neutral as of yesterday's close. The primary wave also down as of October 31st. All right, year to date for the VectorVest composite, up 11.78%. Here's some historical info from August and September. And then if we look at October, you can see that Canada year to date, 15.24%, the US 11.78%, Australia at 9.03%, and the European Union 5.48%. Those are all the year to date numbers, and you can see what the markets did in October. Canada and Australia able to eke out a bit of a gain, helped by commodities, no doubt. You can see the US in October was down 1.64%, and the European Union down 1.88%. Okay, so moving on, looking at Australia next. Here's the Australian color guard. You can see their market timing gauge needle, 2 ticks into the red. Their guidance reads the color guard is somewhat bearish. VectorVest does not advocate buying any stocks at this time. And in Australia, they closed out, or at least started November, with a confirmed red light in the price column, a red light in the BSR column as well. You can see the same news here, how we've had the BSR, especially in the MTI, really kind of jumping from one level to the next, both to the upside and the downside over the last few months. All right, Australia is in a down-up situation. And So Australia year to date, 9.03 to the plus side, as I mentioned. And here you can see a roundup of their market timing signals, confirmed calls, and DEW still up. They've been up since September. The green light buyer went to neutral on the 30th of October, and the primary wave turned down on Friday, the 1st of November. Moving on to the EU or the European Union here, you can see their market timing gauge needle straight up into the yellow. Same guidance as Canada and the US. And looking at their color guard, you can see, so the BSR is down below 1. RT is hanging on above 1, as is the MTI. They're in a down-up situation. But of note, you'll see once we look at the confirmed call there, they've gone down the same time as the US. The confirmed call turned down on the 31st of October. So as mentioned, year to date, European Union putting in a 5.48% return. And here you can see the roundup of their signals there. So as we mentioned, confirmed call down, the DW down as well, turned down a day before the confirmed call on the 30th of October. Their green light buyer is neutral as of the close of Friday, and their primary wave turned down on the 29th of October. So quite a bit of red on the signals in the US and Europe already. And if this market does continue to slide, you will see Canada and Australia start following suit. All right, here's the Canadian market timing graph. And we're going to see a common theme here, folks. You will see all of our markets sitting on support level. All right, so we have pulled back. You can see Canada put in the high here a bit over a week and a half ago. We've pulled back, basically testing support of a previous consolidation channel that we were in. You can see that bounce on Friday. Now, you'll see quite a difference when we look at the US graph, but the question's going to be, is this a dead cat bounce? Or are we finding support here and going to be able to see a follow through or confirmation of what we now have as a bullish candlestick pattern on the Canadian side? All right, but you can see we had a fairly tight channel here. So we are finding support at the first level. If we break through that, we do have another fairly close level here. Before we get into some levels of support further down. And of course, we have resistance at our previous swing high. You can see all of the indicators here move into the downside fairly aggressively, but you can see in Canada, the MTI and the RT continue to hang in there above 1. Buy to sell ratio, though, has broken down. Here's the US side. So as mentioned on Friday, the US market was looking pretty good. It was up pretty strongly. They did end up with what typically folks would look at as a gravestone doji. However, that should be at the top of an uptrend to fully qualify. But it was interesting to see most of the gains for the day did evaporate. They did finish with a green day. But yeah, as mentioned, gave back a lot of gains. Here you can see their resistance level at the previous swing high as well. And just like in Canada, you can see the US sitting right on this level of support. So we're going to see if that's going to hold. All right, we'll have to see what next week brings. Now, we have heard a lot of folks saying that they're just staying on the sidelines and waiting to see how the election plays out, not just in the US, but in other countries too. Now, if this level of support breaks down, you can see another level down here, pretty good level in around the $67 mark. All right, and here you can see on the US side how all of our proprietary market timing indicators have broken down below 1 in the US market. Here's Australia. So Australia, we're looking at the same story from the previous swing high. They were actually able to retest right in this level here. All right, before a bit of a sell-off. And you can see with that wick, they have come right down into the support zone here so far, have found support there. They have a bit of a doji on Friday there as well. All right, and then if this level fails to provide support, you can see a fairly close level right here in the Australian market. Like Canada, the MTI, the RT have continued to hang in there above 1, but the buy to sell ratio is broken down below 1 in Australia, the land down under. And here's the European Union. Even though their market is sitting right at this level, you can see it's right on the 65-day moving average, actually. But, you know, the reality is we've got the last clothesline in here, and you can see how that was acting as resistance here, support in this area, resistance once again. Market was able to break through, acted as support through this area, and you can see all of the touches. So not surprised that the market is looking for support right at that level, but you can see the other levels picked up by the settings of the support resistance indicator. All right, so if the market can bounce here, we now have this level of resistance before being able to take a run at this old swing high here. Okay, and if the market breaks down, we have another level of support right here, and then down at this level here in the European market. And there too, on the European side, you can see the MTI just barely hanging on above 1, as well as RT. We did see the buy to sell ratio break down below that level. All right, so that's a roundup of the color guards and the market timing graphs for all the VectorVest nations. Let's take a look now at our global markets tracking ETFs. These, of course, are found in the US software. You'll find them under watch lists and cherry picking. Maybe I'll bring up the US software here first just to kind of show that. So if we go into viewers, watch list viewer, and we go to cherry picking, here you'll see we're going to talk about the global market ETFs, and we'll also mention the sector ETFs. So you can find both of those in the US software in that location. All right, so here we have September, a little historical roundup there. Look at the difference between September and October, folks. September, we are looking at, out of the 43, we are looking at 36 winners, 7 losers. And in October, we're looking at 3 winners, 40 losers. You can see as a basket, the overall loss was 4.27%. So losing more than the VectorVest composite, which was down 1.64% in October. And you can see those 3 winners. The only 3 that were able to stay on the plus side were Israel, Peru, and Taiwan. You can see a roundup of the other ETFs there. All right, top 10 shown only on both sides. Okay, so it was interesting. September, at the very beginning of September, I remember in the forum, September was not starting out good. It ended up really taking off and being a fairly good performing month. October, we were looking at, I think maybe around the same thing. October did take off for a while, but we did see that pullback. So not looking good here for the global market ETFs, that's for sure. Taking a look now at those global market tracking ETFs. So we have October from the right-hand side on the previous slide. Looking year to date, you can see year to date, it has been a pretty good year. So we've got 35 winners, 8 losers. All right, And here you can see as a basket, a 7.48% gain overall, underperforming the VectorVest composite, which came in at 11.78% year to date. But you can see who's out in front here. We've got China large caps, Peru, the S&P 500, rounding out the top three, an ESG MSCI, and Taiwan adding in to round up the top five. You can see the top 10 in there as well. All right, so pretty good year for the global market tracking ETFs, but they have fallen off of late. Here's our look at the performance of the market sector ETFs now. So here we've got the year to date on the left-hand side. Whoop. Let's get back to that one. All right, so you can see semis have led the way. I think they've led the way for the whole year. You can see we've got 30 sector tracking ETFs. We've had 26 winners, 4 losers year to date. Semis leading most of the way. You can see a 39.96% gain so far. And just rounding out the top 5 here, we've got gold miners, so the GDX, GGME, Next Gen Media, XLC, and XLF. Rounding out the top 5, you can see the top 10 in there as a basket. Year to date, they've got a 9.94% return, underperforming as well the VectorVest composite at 11.78. And if we look at the sector ETFs 10-day delta, so this is in the Unisearch on the US side, you'll see that what do we have? 4. So 10-day price delta, we only have 4 showing a positive return. So that's Invesco Solar. Here we've got XLC. So we've got 10, XLC, XLY, consumer discretionary there. And then we've got XSW, Spotters, S&P software. You can see a clean energy in here as well. I was wondering if maybe some folks in the investment community trying to hedge for a possible Democrat win in the upcoming election with those clean energy ETFs, but remains to be seen how things play out. All right, so that's the global market and the sector ETFs out of the US side. Taking a look at central bank interest rate decisions, rounding out October. You can see, so the main players for us in October were the European Union, which lowered rates. Canada also lowered rates, both lowered them 0.25%. Japan held. Now, going into November, of course, I think most of the action's over very quickly in November. All right, so you can see right out of the gates, we've got the Royal Bank of Australia coming out on Monday with their interest rate decision. And then the UK and the US, both on Thursday. Of course, those interest rate decisions will come after the election. So we'll see how they play out. Right now, consensus on the US is that it's almost a no-brainer that they're going to cut by 0.25%. But of course, we'll have to wait for that decision to see how that plays out. Once the US is done, not really anything else that we'd really be tracking other than once we get into the end of November, November 27th, we will have the FOMC meeting minutes at that time. All right, so that's the central banks. Let's get into the VectorVest essays from around the VectorVest world. So once again, folks, another great week of essays. We've got the summary of them here. So out of the US, Angela Akers wrote an essay entitled Best Stocks to Buy Post-Presidential Election. All right, so how to use VectorVest to find best stocks to invest in depending on the outcome of the US presidential election. And that essay played perfectly into the special presentation done by Mr. Steve Chappell. So hopefully if you haven't had a chance to check that out, You can check out the special presentation over the weekend. Out of Canada, Don Reitzma wrote an essay entitled Ensuring Your Portfolio During Earnings Season. So how to use VectorVest to decide how to protect your holdings leading up to an earnings event. Out of the European Union, Susan Hayes Culleton's was entitled Net Profit Margin. So how to use the VectorVest Net Profit Margin Indicator to find great profitable investing candidates. And then out of Australia, Robert and Russell Markham wrote an essay entitled Zip Breaking Out. So how to use VectorVest to find and analyze. They were looking at the buy now, pay later portion of the industry down there. So stocks that are breaking out like zip.ax. All right, so another great week of essays. Hopefully everybody is aware, if you do want to read an essay from one of the other countries other than the main country you invest in, you can, open up another login prompt for VectorVest, select the flag from that country and log in as you normally would. Once you log in, you can go to the views and go to Friday's views to find those essays. All right. Okay, so that's the roundup of the essays. Here's the November Almanac. So according to Hirsch and Mistel's 2024 Stock Traders Almanac, November is the start of the best 6 months of the year. Right, so you can see that the price of the VectorVest composite has gone up 22 times in the last 28 years with an average gain of 3.96%, down 6 times with an average loss of 5.14%. So we got a win rate there of 78.6%. But we do look at election years here, and you can see the win rate in election years slips to 66.7%, with 4 wins, 2 losses in the 6 election years that they've experienced over the last 28. All right, so that's the November Almanac. We'll see if we can start a run. I know last year we started a really good run. Most of our markets, the 52-week low for the last year was the 27th of October, 2023, and our markets ran fairly well from there, as we've seen in the results. Here's the earnings update. We are in the midst of Q3 earnings season. So 70% of S&P 500 companies have reported as of the close Friday. So 75% were beating on the bottom line, 60% beating on the top line. All right, so that's it for that part, folks. That brings us into trade ideas. So I'm going to start with the Canadian software here. And what we'll do is we will, I'll just kind of frame things as we did last time, folks. If you remember, last month, we were kind of in the same scenario. Markets had pulled back and we're on a level of support, just like they are in all of our markets here. So really, we're waiting to see whether this support is going to hold and which way the markets decide to break from here. So last month, basically what I did was I took the approach of let's go with Midas Touch stocks. So we know we're looking at momentum stocks when we're looking at the Midas Touch list. And let's look for stocks that have pulled back like the overall market has, but we're running well, as the market was running. So these are watch list stocks. We're going to have to watch the overall markets and see how things play out. But I can tell you, last month's picks, I was reviewing them, and overall they fared very well in most of the countries. I think some of the better stocks on the U.S. side didn't actually fare as well, but overall, that approach worked really good in October. There was opportunity to make money in almost all of those picks. All right, so what we're going to do is, because the market setup is exactly the same here, we're going to go with the same approach. So I've got the Canadian software open here. We're going to go into the watch list viewer. The other thing that I took a look at, we'll graph all of these here. Let me bring my graphs over here. So the other thing that I wanted to keep in mind here was earnings, because we are in earnings season. So tried to avoid earnings where I could. Now I can tell you in the Canadian market, the way our companies play out with earnings seasons, it's a little bit harder to do. Also wanted to kind of stay away from commodities, but that's pretty impossible to do in some of the markets here as well. And commodities have been running good. So you can see for those folks that don't know about the Midas Touch layout, and I'll just show you in the graph layouts here. Here's the Midas Touch layout. All right, I've added earnings per share to my graph here. All right, so you can see in Canada, I'm showing ticker AGI, Alamos Gold, and you can see the makeup of the Midas Touch layout. We've got a 10-period moving average of stop, a 65-period moving average of stop. You can see both of them trending up. We've also got a 40-period moving average of RT down below. So to be a Midas Touch stock, we have to have the 10 moving average of stop above the 65, and our 40-period moving average needs to be above 1. All right. You can see earnings trending up nicely on Alamos Gold. Of course, we're not just looking at the overall market here. When it comes to commodity stocks, we're looking at the underlying, which in this case is gold as well. So you're going to need probably both of those in your favor. But you can see how Alamos has been moving up the page, has pulled back to a good level of support. And we'll have to see how it plays out. As mentioned, watch the stocks. So keep an eye on the overall market. And if we are showing a commodity, you'll have to keep that in mind as well. One thing that I will point out, the other one that I've tried to stay away from is where you can see some bearish divergence. So I will point it out on Alamos that you can see here, if I put a freehand line on, you can see the market continuing to put in new tops here. So just keep this in mind. Now, stocks can run this way for quite a while, but you can see RT not putting in higher highs as stock has, as Alamos has gone up. And I will also throw in the caveat, when we're looking at gold, I have seen a divergence of late in the last few weeks with price going up in gold and gold miners dropping on some of those days when gold is climbing pretty nicely up, $20 an ounce or so. All right, so that's something to keep in mind as well. So that's Alamos Gold in Canada. This one was actually one of our picks, one of the trade ideas we gave last month. And you can see, so Canadian Imperial Bank, CM is the ticker in Canada. You can see earnings running up nicely here. Here we're not looking at that bearish divergence story. And Canadian Imperial Bank hasn't really pulled back. They've basically been consolidating while the overall market has been pulling back. So that was Canadian Imperial Bank. Here we have POW. All right, so Power Corp. This is an insurance company, fairly large conglomerate out of Canada. All right, insurance has been doing really good. You can see their earnings continuing to move up. Here again, you can see how I've avoided that bearish divergence between price action and RT. And you can see with how they've moved up. They have pulled back with the overall market. You can see that bounce on Friday as well, and fairly close to their most recent high. So you're going to want to see the overall market take off again, and keep an eye on a stock like POW here to break out of the most recent high. Here's another insurer, Manulife Financial. You can see earnings running up nicely, price action again running up nicely, and this one has pulled back to this level here. So another one to keep an eye on if this market does decide to continue the uptrend. Here's WSP Global. Okay, you can see earnings running up nicely. We do have a slight bearish divergence between RT and price action here, but this one basically been consolidating while the market's been pulling back after a nice run up here. Oh, and the one thing I should point out on these ones too is I do have earnings here, so you can see last year's earnings was the 9th of November. So keep in mind, especially on the Canadian side here, that WSP will have earnings coming up, most likely this week or next week. Here's National Bank. So National Bank earnings looking nice here, not looking at the bearish divergence between RT and price action. You can see the price action's been running up nicely here as well. They will have earnings near the end of November or beginning of December. You can see it was beginning of December last year. So you still have a month if the overall market does continue to move up. You can see they did pull back the last couple days with the overall market pullback. Here's Descartes. All right, and Descartes is going to show up twice. It's going to show up both on the Canadian side and the US side. It's interlisted. So this one you can see earnings looking nice. We do have that bearish divergence with RT. I'll point that out, but this continues to run, has been consolidating of late more than pulling back. So if the overall market can go, keep an eye on Descartes to be able to get past its previous swing high here. Okay, so that's the Canadian side. Let's jump over to the US side next. Okay, we'll go to our watch list viewer here and we'll graph all of these on the US side. So exact same strategy here, folks. So I think what I didn't mention was I'm looking at the Midas Touch stocks, but I am looking for a pullback. All right, so if we go into cherry picking here, all of these are coming from the Unisearch Midas Touch dash VST divided by RT descending. All right, so here's ticker FI, so Fiserv Inc. This is in business services. You can see the earnings running up here nicely. A slight bearish divergence between RT and price action, but you can see this stock has moved up nicely, pulled back with the overall market right into this level here. You can see the bounce that it got on Friday, and it didn't hand back like the rest of the market. So if this market can continue to move up after the US election, keep your eye on that one. Here's Netflix. So let me just turn earnings on here. So you will see that a lot of these stocks on the US side do have earnings behind them already. Netflix gapped up on earnings and has basically been consolidating since that gap up. All right, so we'll see what the overall market does, but here you can see earnings running up nicely for Netflix. We are seeing that bearish divergence between RT and price action on Netflix too, though. Here's T-Mobile. So T-Mobile really moving up the page nicely, has pulled back with the market pullback right to this old top here. They do have earnings behind them. No bearish divergence between RT and the stock price. And you can see their earnings up at a level of 1050 per share. So another one to keep an eye on if this market does decide to break out. Here's Performance Food, a bit messier graph. You can see their earnings moving up nicely. We're not looking at the divergence between RT and price action. They do have earnings coming up though. So you can see they did run up to a high here on the 17th of October. basically pulled back and then retested. This is almost a Wyckoff spring setup where they pulled up through this level, come back and tested now as support, weren't able to put a new high in here, and then it pulled back again. So keep an eye on that one if the overall market does continue to move up. Here's what I mentioned, Descartes, also on the US side here. So you can see earnings running up nicely. We do have that bearish divergence between RT and price action, but this one continues to run up nicely and has consolidated. It got a good bounce on Friday there as well, and very close to its most previous swing high. Okay, so that's the US side. Let's jump over to Europe next. And we'll go to viewers here. We'll graph all of those. All right, so everything pretty simple here. Everything's the Midas touch layout. And here we have a bank. So bank domestic ticker is cbk.de, Commerce Bank. So you can see with this one here, it has been running up, not in a straight line price action wise for sure. Been a bit of volatility in that one. You can see earnings per share moving up nicely. We are looking at a slight bearish divergence between price action and RT. But you can see that one's run up into a high and pulled back with the overall market is consolidating as we speak. All right, so again, watch list stocks if this market does decide to start moving to the upside again. Here's a Scout 24, so the ticker's G24.de, earnings per share moving up nicely. No divergence between RT and price action. This one broke out. I wanted to make sure I had earnings on here. So you do have earnings coming up on CBK. You will have earnings coming up. Actually, looks like they just had earnings. So that looks like a gap up on earnings on Scout 24 on Friday. All right, so that one's running up the page nicely. Here's nm.mi. So this is also financial management. This one looking more like, so we've got earnings running up here, bottom left, upper right. No divergence between RT and price action. And this is one that has run up to a swing high, pulled back with the overall market. You can see the nice green candle that they had on Friday. This one is itx.mc, so apparel clothing. And you can see another nice earnings story here. No divergence between RT and price action. Moved up nicely, pulled back with the overall market, looking for support and looking to see what the overall market does before deciding what it's going to do. Here's a CABK, so Hexa Bank SA, so a bank international. So this one, earnings running up nicely. We have that bearish divergence between RT and price action, but you can see with this one, it's got earnings behind it now. Looks like 2 sessions ago, and looking to break out of resistance zone here. All right, so if the overall market can continue to run, you might see some upside potential there. Here's SGO.PA, building products. All right, and kind of the same story here. Earnings moving up nicely. We've got the bearish divergence between RT and price action, but this one is running right up against resistance at its old swing high as well. Here's one that most people probably know, SAP.de. All right, software business. So their earnings story, they did see declining earnings, but looks like they're heading back up the right way now. We do have that bearish divergence between RT and price action, but they've been able to run up regardless of their earnings. This stock has continued to run up all year. And you can see I've run into a swing high here from just 4 sessions ago, pulled back with the overall market. So we'll see what happens if this market can continue to the upside. And here is the last one for the European Union, EDNR.MI, Edison. So this is utility electric. Earnings moving up nicely here. No divergence between RT and price action. They ran up into a nice high here, have earnings behind them. Okay, they've gone down after earnings, look to be consolidating a bit in that area. Okay, so the last one we're going to take a look at here is going to be Australia. So I'll bring the Australia software up and let's take a look at what we have in Australia. So we'll graph all of these. All right, so here we've got NWL.AX. So this is financials diversified. You can see earnings per share moving up the page fairly nicely here. Price action moving up nicely. A little bit of bearish divergence between RT and price action, but you can see how this one too has run up and pulled back slightly with the overall market. This one already starting a bit of an uptrend here, looking to challenge the most recent high. Next, we're looking at WQG.AX. So this is also financials diversified. And you can see earnings moving up the page nicely where we do have bearish divergence between RT and price action here. This one too, if we're looking at price action, didn't really pull back, is just kind of consolidating and right up against resistance at this old swing high. So if the overall market can take off, we'll see if that one can break out. Here's Sandfire Resources, SFR.AX. Earnings running up the page nicely. A little bit of bearish divergence there between RT and price action. This one not a smooth runner for sure, but has run up recently here and pulled back with the overall market to a fairly good level. They're looking for support, looking to see if that one can bounce. This one here is GDX.AX, so Generation Dev financials. So financials diversified, running pretty well in Australia here as well. Not a lot of earnings, 7 cents per share, but we do have a bit of a stair step up. No divergence between RT and price action. This one's run up nicely, pulled back with the overall market. So another one to keep track of there. Here's Emerald Resources, EMR.AX. Earnings running up here nicely. We do have that bearish divergence between RT and price action, but you can see price action did run up and has pulled back with the overall market here, right back into a good level with these old tops. All right, so another one to keep an eye on if the market can bounce. All right, so that brings us to the end of trade ideas, folks. So if this market can bounce, we'll see if some of those can be as good to us as the ones we were looking at last month. So at this point, we are going to turn things over to the man we've all been waiting for, Mr. Ron Wheeler, who will give us his keynote presentation entitled Strategic Entry Points for Blue Chip Stocks. Take it away, Ron.
All right. Well, thank you, Rick, and it's my pleasure to be here this morning. I guess it still is morning here, 11:49. As Rick mentioned, I'm in Ohio, and it's kind of fun to be here. And what the best part I think about this is, I've been kind of reaching out, if you will, past options. Everybody, for the most part, knows me here at VectorVest as the options guy, but I do have a pretty good history of trading as well. So I'll give you guys just a quick background of how I came into the industry and everything. I've actually been trading now for 27 years. I started back in 1997, and I originally came into the industry as a technical analyst. So I learned Elliott wave, I learned Gann, I learned Fibonacci, I learned chart patterns, bar patterns, and that really made up the core of how I found my trading opportunities. Now, I was a commodities trader, but it doesn't matter. You know, a graph of corn is essentially the same thing as a graph of IBM. Data is data is data. And what I've seen over the years and years of doing this is that it doesn't really matter ultimately what you trade. It still becomes really the same thing. So I've applied a lot of what I did as a technical analyst. I've applied that to how I look for stocks in VectorVest. And one of the things that I've done a lot, really in the last 10 years I've been here at VectorVest, is I've combined a lot of our fundamental information into a lot of my technical analysis background. So that's what I really want to share with you this morning is how to look at both things and try to find good places to get into these stocks. Now, everything I'm going to show you this morning is really based on bullish markets, but you really could just kind of flip the script for bearish markets. When I first started putting my presentation together and started doing the research and started doing the testing and everything and started doing the searches, the market was still in a confirmed up. We were in a do up. We were in a primary wave up. Everything was up, 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 up. So I kind of prepared it more towards the upside of the market versus anything else. So let's do this. I'm going to switch over to my PowerPoint presentation. Then we're going to go into VectorVest also. But what I want to show you guys first is this. This is kind of a little checklist, if you will, that I put together for myself. So at the top of it, it starts off with the strategic entry for blue chip stocks. Now, to me, what is a blue chip stock? Well, it relates back to VectorVest. It relates back to our fundamentals. What's really good that I've learned over the last 10 years here at VectorVest that drives good stocks? I love relative safety. And in fact, if you watched in the US here, if you go into the views area and you go into the special presentations, I would urge you. I did this about a month and a half ago. I did a special presentation, how to outperform the market with the safest stocks. And basically, I did this presentation blind. I didn't back test anything. I didn't do anything special. I picked random dates from the past, sorted all of the stocks by relative safety, and found that it all outperformed the market just by looking at relative safety. So it's a really good way to find good stocks, good relative safety stocks. Now, on the other side of that equation, growth rate. Okay. When growth rate is good, 14% is really, really good. That's going to lead you to a really, really good stock. Now, you could also reverse this if we go into a downtrend. You can look for lower RS, although that's a little bit sketchy. You can look for bad growth. Bad growth is really good in a down market for stocks to move them down. So that's the fundamental setup that I really like for what I consider to be a good blue chip stock. Okay. Now, as far as the entries, the technical entries that I like to use, number one, I always like to back things up with an indicator. And as I mentioned, I was an Elliott wave guy. I still am. I still like the Elliott wave concept. If some of you are familiar with that, great. If not, you can research it and Google it. But I'm not going to sit here and teach you Elliott wave theory because I don't really think the Elliott wave theory in and of itself is all that vital. I just understand and I have a belief. Oops, I accidentally popped some slides in here. I will just show you this. My concept for Elliott wave is the market goes up, the market has some sort of a profit-taking decline, and the market goes back up again. You can call that an Elliott 1, 2, 3, 3, 4, 5, ABC. I don't care what you call it. It's a good trend. Trend, profit-taking decline, continued movement up. What I want to do is I want to try to find these good RS growth stocks. I want to try to find them down here. That's what I'm looking for. And stochastic is really one of the best tools that I've found over my 27 years of trading to find these points. Now, I don't want to just look at stochastic and buy a bunch of things based off stochastic. Number one, I'm looking for a good fundamental stock. Two, I'm looking for an indicator that's telling me it's now time to get into that position. And I hesitate to say this, it's on sale. The market's coming back a little bit off its highs, but still fundamentally, it's a very good stock. It's giving us a good opportunity to jump into that stock at a really advantageous price point. Then I need to take a look at the actual price action because over the course of my career, and I'm pretty sure this came from Paul Tudor Jones. I could be wrong on this, but one of my mentors always explained this to me from a Paul Tudor Jones interview from the 80s. They had asked him, why is he good at technical analysis when others are not? And his response was simply this. He's like, over the course of time, I have learned that studies are to be used, but not necessarily believed. Okay. Used, but not necessarily believed. What does that mean? It means that use the studies, take their guidance, but don't necessarily believe what the indicator's telling you. You need something to back it up. And that's where the second part comes in, actual price action. Now, the first thing I talk about is Delta 248. And I'll explain what this means. It has nothing to do with THC, by the way. I'll explain what that means when we get into some of the searches I want to run. But the biggest thing that I want to talk about for right now is simply the idea of higher highs, higher lows, prices above midpoints. Now, I am a bar pattern guy, not a candlestick pattern. Not that I have anything against candlestick patterns. I think candlesticks are great, but I was trained how to use bar patterns. Okay. So I'm going to show you on an actual open, high, low, close bar some of the things that I look for. Now, once you have that, these are kind of what I call the technical and the scientific things, right? These are things that can be actually done as a rule set. Does the bar have a higher high? Yes. There's no ambiguity about that. Is it higher than the current midpoint? Yes. There's no ambiguity there. Is the stochastic below 20? Is it rising above 20? Yes. There's no ambiguity there either. Okay. These are the scientific approaches. Even with the high RS and growth, it's the same thing, right? Either RS is up or it's not. Either growth is above 14 or it's not. Then we have to get into the best part, the artistic side. Artistic simply means things like trend lines, things like support and resistance. These are all things that I want to look at as I make my decision to enter into a stock. Now, from there, once you have all this done, this is where, your strategy can kind of explode. I mean, you can buy the stock. You can come to me for an option strategy based on what you see on the screen. This is where everything kind of opens up to what you want to do. Now, let's do this. Let's hop into VectorVest real quick, and I'm going to switch over the screen. And let's take a look. There we go. There's VectorVest. There's the homepage of VectorVest. All right. So first thing I want to talk about, I want to do some real life work in this, and we'll take a look at some stocks in hindsight as well. But the first thing I want to do is I want to go over to the Unisearch, because the Unisearch is going to be a really big part of how we find a good stock to begin with. So I'll share with you some scans that I really, really like. And some of these scans are pretty much the hallmark of how I do my actual trading. So under the searches area, and you'll see everything is labeled, A through Z. But under searches, I tend to use two folders the most. I tend to use prudent and I tend to use retirement, because these are generally going to be your safest stocks. Good growth, good RS, things that are good fundamentally. So I'm going to open up search as prudent, and some of the scans I like in here, I happen to like great stocks. Now, if you look at great stocks, what makes a great stock? Well, take a look up here. Your growth rate is over 12. Your relative safety is over 1.5. Doesn't get much better than that, does it? You can go down to prudent performers. Here we go again. Growth rate 15. Relative safety over 1.15. Good value too. So it adds a couple other things, sorted by VST. We can go down to ruler stocks. I really love ruler stocks. Now, the downside of ruler stocks is it's a very, 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 very conservative scan. I always joke with my coaching students, like, let's check ruler stocks today and see exactly what we can find. If the market's not in a good bullish trend, then we probably know that, you're not going to find any ruler stocks, right? So ruler stocks. Another one I like in here is safe and sound. Safe and sound is pretty good. You've got a growth rate the relative safety above 1, good VST. These are all good scans to use. Now, if I scroll down and I go to search as retirement, there's some good scans down here. Number one, I'm a big fan of long-term winners, RS descending. Now, the one thing I will tell you about long-term winners, RS descending, okay, is that it sorts them by RS, but you may get stocks, and I'll just run that search real quick. You might get stocks towards the bottom of the list that the RS is pretty low. Now, you probably shouldn't, because what I would tell you to do is always limit your scans to the top 20. That's going to help you kind of stay in the top side of all the indicators. Okay. All right. Another one I really like is the Vector plus Vector 1.25. And again, the good part about this, growth rate over 10%, relative safety over 1. So any of these scans are really, really good scans in my opinion. So let's do this. I'm going to take it back, and I'm going to take this back to search is prudent, and I'm just going to go with great stocks. Okay? We're going to go with great stocks. I'm going to run the scan for the close of yesterday, and let's pull up some stocks. Let's go ahead and run it. Oh, no results found. All right. Well, I mean, the market is kind of turning over right now, so I guess that can happen where there's no results. Let's go to Safe and Sound. Safe and Sound is a little bit more open. The RS is a little bit lower. The RV is a little bit lower, and it doesn't take growth into account. All right, so we got a little bit more stocks to choose from in this particular scan. Now, I'm going to go ahead and just graph the top 10. And here's a graph of the top 10. And in a second, these should all start to pop over. Now, if you look at some of these stocks, right, these stocks do look pretty good. ANET, very strong stock. Look at EPS. RT is still going up pretty good. You've got NVIDIA, been a strong stock up till the last week. You've got MCOR, same thing. These are all stocks, even though the market may be toppy right now, these are all stocks I probably wouldn't mind owning. This one just came down, I would imagine, from an earnings announcement, but other than that, it's starting to recover. That's FIX. IES Holdings, again, good looking stock. Taiwan Semiconductor, pretty good looking stock, other than the current pullback, and Train Technologies. All right, so we got a good idea of what I consider my blue chip stocks. Now let's start going into the model of what we're looking for from really let me get back to my PowerPoint presentation, from the price action. I want to show you guys a couple of things that I look at. And number one, I want to talk a little bit about bar pattern techniques. So this is actually a presentation that I had made probably 20 years ago. This is the actual slide I used to use 20 years ago teaching technical analysis. Now, for some of you, this is probably going to be some pretty basic stuff, but ultimately it's very important. So to me, there are 4 types of bar patterns. Now, again, I'm looking at an open, high, low, close bar, not so much looking at a candlestick. I want to see the highs. I want to see the midpoints. I want to see all this information. So what we're doing is we're always comparing the current bar, whatever the current bar is. Now, the good thing about this is if you're a swing trader, if you're a day trader, I use this information back when I was a day trader. I use this on 3-minute graphs and 5-minute graphs and tick charts. Now I'm more of a longer term trader. I use this on daily charts, weekly charts. It doesn't matter. This applies to whatever type of graph you're looking at. It makes no difference. Always compare the current bar to the prior bar. Okay? If the current bar has a higher high over the previous bar, okay? So right here, if it's got a higher high than the previous bar, that's good. If the current bar has a higher low than the previous bar, that's good. That is 2 stages of being a buyer's bar or buying behavior. Higher high, higher low. But now we got to look at the internals of the bar. To truly get this into a position where we see a higher high, higher low turning into bullish, we want to have the current closing price. Now, this can be in real time. So if you're looking at this at 1 o'clock in the afternoon Eastern time, or if you're looking at it at 10:30 in the morning while the market's open, it doesn't make a difference. Whatever the current price is, I want the current price greater than the opening price and greater than the midpoint of the bar. And preferably, I would also like it higher than the previous day's high. That is how you know a stock is going up. Okay. So if I don't see that, that's a huge red flag to me. I want to see this thing going up. So if you ever watch my URS or if you ever watch my real-time trading sessions, I have this parameter built into all of my scans when I'm looking bullish. I need to see this. Now I'll walk you through that as well. Now, if this is a buyer's bar, this is a seller's bar. Everything is simply reversed. Okay? Remember, we're always comparing the current bar, whatever the last bar on your screen is, to the one right before it. So if it's Monday, you're comparing it to the Friday bar. If it's Wednesday, you're comparing it to the Tuesday bar. If it's 9:30 in the morning, you're looking at a 5-minute graph, well, you'd be comparing it to the previous day, right? If it's 10 o'clock in the morning on a 5-minute graph, you'd be comparing it to the 9:55 bar. So whatever the prior bar is on whatever time frame you're trading, this is what you're going to look at. Okay? So selling behavior, pretty easy. Low or high. All right? Now, for some of you that have a sharp eye, you see there's a button here or a little text there that says true high. True high is not really important for this presentation, but if you really want to know what I mean by true high is typically, this was more important in the commodities world than it was the stock world. True highs related to either the actual high of the bar or the prior day's closing, whichever one is higher. And the reason why I say this is more of a commodity thing than a stock thing, commodities tended to trade 24 hours, not completely 24 hours, but most of the hours. Stocks don't do that. So the reason why we did that in the commodities world was to kind of essentially eliminate gaps, right? So that's not something that I really care about in the stock world. So don't worry about that. Just look at the actual high of the bar compared to the previous high. If it's lower, that's good. That means selling behavior. Now look at the lows. Prior low, current low. Lower high, lower low. Selling. Now, the current close, less than the midpoint of the bar and less than the prior open. And in a perfect world, less than the previous bar's low as well. That is a seller's bar. Okay? So the first thing that I like to do when I look at a scan is I like to add this type of information into it. So let me kind of show you how I do this. Let's take that scan. This is that same safe and sound scan. What I want to do is I just want to add a parameter to only see things that have a buyer's bar. So I'm going to go to my parameters. I'm going to go to stocks, price, and I use price actual. Where is it? There it is. Price actual is greater than, and under value, I'm going to go to custom date and value, choose date. I'm going to do 1 day ago. And under choose value, I'm going to go to stocks, price, days high, and click OK. Okay. So if I run that search, all right, first thing you're going to notice is all of my stocks in that search are now up. I don't like buying stocks when they're down. I only like buying stocks, or for the options world when I do options trades, I only like entering my bullish options trades when stocks are moving up. So if I graph these, here's what you're going to find. You're going to find, and let me zoom in here a little bit closer, you're going to find stocks that are all moving higher than the prior day. That's kind of what I want to see. And let me just kind of run this. I'm going to right click on the price and I'll change that type down to open, high, low, close. Okay. You're seeing stocks moving higher. It's a good thing. That's what I like to see. Now, what you're also seeing though, is you're also seeing, look at where on EVR, look at where the close is compared to the open. Now, if you don't know what a midpoint is, or what I was referring to as a midpoint, this is what I mean as a midpoint. Okay. You've got the high of the bar, you've got the low of the bar. Let's say the high of the bar is $200 and the low of the bar is 199. 199 is the low, 200 is the high. The middle of the bar would be 199.50. So let's further do this. Let's go to stocks, price actual is greater. Now this is one of, some people don't know this in VectorVest. Under value, I'm going to go to stocks, VectorVest fields, and right there in the middle is high plus low divided by 2. Run the search. Bring up the graphs. Zoom in a little bit here so you can see the last bars. Now what you're seeing is this. Higher high, generally higher low, close above the open, close above the midpoint. IESC, Train Technologies, LPX, CLS. This one's pretty close. MMYT, SkyWest, Eaton Corp, DSGX. So this just alone, okay, adds a ton to your buying searches. Just looking at the entry point alone of higher highs. Now, you could also, if you wanted to, do a scan for the higher lows too, you know, if you wanted to. But generally speaking, you just really need to do this. And it pretty much all falls into place. And yes, this would gather for any, Andrew, you'd asked that this gather for weekly timeframes. Yes, this will do for anything. So whether you're doing weekly, daily, 5-minute, you would just have to kind of run, you might not be able to scan for it, but you could definitely look for it on the actual charts when you see things. Okay. So this is one of the things that I really, really like to see. Okay. Now, if you remember, I also talked a little bit about, let me go back to my slides. I talked a little bit about indicators. Well, the price action is what's going to help us get and find these particular stocks, right? We already found good stocks with high RS growth. Okay. Now we found good price action moving where I want to move it. Now let's find a stock that's actually setting up in a technical pattern. This is where your stochastic is going to come in. So let's go back to the Unisearch. And again, all I'm doing is I'm taking good scans that are good, high growth, high RS stocks. Okay. Now I'm going to go to parameter. We're going to add stocks. We're going to add price. I'm going to do price split adjusted this time because now I'm going to do a Pro Trader scan. So you have to have Pro Trader for this to do this in the Unisearch, just to keep in mind. Once I have price split adjusted, I'm going to go to my operator. I'm going to go to Pro Trader, and I'm going to choose my stochastic oscillator. Okay. Next, I'm under value. I want the stochastic 14.3, and the slow is fine. I like the 14.3. I say crossed in the past 1 day. Now, this is where you can kind of go either way with this. Okay. So let me just do it this way first. Has crossed in the past 1 day above 20. I'm just going to leave that in there. I'm going to see if I can find something. I should be able to find a stock or two at this right now, since the market is coming back. I'm going to go ahead and look at these two stocks. So here's what we've got. We've got Louisiana Pacific. So if I take a look at Louisiana Pacific, all right, and I'm going to add the stochastic. So I'm going to remove the stop price. I'm going to remove the RT, and I'm going to remove the earnings per share, and value is not listed. I'm going to remove that too. I'm going to go ahead and add technical analysis, and I'm going to go ahead and add my stochastic oscillator. All right. So here's what I see in this particular trade. This actually is something that I would really probably be very interested in trading Louisiana Pacific if the underlying fundamentals of the market were still up. You know, if we were still in a, and as Rick said earlier, right, we're in the US market now, we're pretty much down on all of our market timing. The due turned down, the primary wave turned down, we're in a confirmed call down. It's like, everything's coming down. But this stock looks pretty darn good. Now, stochastic. Here's how I look at stochastic. A lot of people look at stochastic, and let me zoom in here. And a lot of people look at stochastic and they try to read it and say, well, right down here on this bar, this is where the stochastic signal lines, the K and the D crossed over. That's the actual buy signal. But how would that buy signal have treated you if you bought it, let's say right here? How would that have treated you? Not too good. When it comes to an indicator like stochastic, and really any indicator for that matter, indicators to me are lagging. They're all lagging. It's easy to see. The lagging indicator, there's 14 bars that are in this stochastic. Has nothing to do with it being slow or fast. There's 14 data points that go into a stochastic. If it's using 14 data points, it's a lagging indicator. And that's okay that it's a lagging indicator. I still use it. I think it's a great indicator. But what I do is I start looking at that indicator more as a guide than an actual buy here, sell here. I always used to refer to this, and again, I'm in the U.S. I don't know how it is in Canada or around the world, but here in Ohio and here in the U.S., we have the National Weather Service, right? The National Weather Service issues us watches and warnings for weather, and they say you have a tornado watch. That means conditions are favorable for tornadoes to form. Be on the lookout. Don't go hide in your basement. Just be on the lookout, right? But then they issue a tornado warning. Tornado warning means that either a tornado has been spotted, or nowadays with our technology, Doppler radar has indicators like a little hook that you can look at on Doppler to indicate, the winds of a tornado. When you get a tornado warning, now it's time to take action. So the way that I look at stochastic is simply this. When the stochastic is below 20, you have what I call a buy watch. Conditions are favorable for you to buy this stock. When the RS and the growth rate are really good, you have a really good condition to buy that stock, but you don't have the action yet. The action is what we're talking about now. When you see the higher high, the higher low, the close above the midpoint, the close above the prior day's high, this is generally when you want to try to get into this thing. Okay? This is generally when you want to try to get into this. Now, what you could also look at in Louisiana Pacific, you can say, Ron, if you go back on this thing, just in this current look, the stochastic has been below 20 really since October 15th, right? It's been there since October 15th. We really haven't had much buying behavior since then. This one is close. No, it wasn't. This high was 104.98. This high was 104.91. Okay? This high was 105.03, but then also look, we had a lower low. This bar right here, this one was probably your closest to being true buying behavior out of all of them. Okay? Well, let's go back to the slides. Now what we have is we have the artistic side of this. Trend lines, support and resistance. So when I look at a stock like this, and I'm going to go back to here, my chart. Bear with me a second. Nope, that's not the right chart. LPX, a trend line. You're buying a stock in a dip, in a pullback, okay? We don't want to try to catch a falling knife. Bad idea. Never try to catch a falling knife. What you're going to want to do is you're going to want to try to catch the stock when it's rising. I'm going to go to my lines, and I'm going to go to a freehand line. Now, if I just draw a line from the 52-week high across the highs that I see, look at LPX right there. Okay? Really, right now with LPX, you still do not have a reason to buy this stock. If I go back even to right here, let's go back to put our date line right here. And I'll just move the graph back to that date. You can make the case and say, Ron, that's that same buying behavior that you talked about with the stochastic below 20, right? Why wouldn't we buy it there? Because visually, the stock is not ready to break. This stock is breaking out in time, but not necessarily price. It's not coming over the current trend line. So that's where you get into the artistic side of things. Now, as you can see, the stock definitely kind of cratered from there. Now, we also have, and this takes us to yesterday, actually, that's the 24th. Even then, you have a really nice buyer's bar right there, right? Higher high, higher low, close above the open in the midpoint. But guess what? We still haven't taken out that trend line. And the market just continues to come down. And that gets us to right here where, look, we have another buying behavior bar. Higher high, higher low, close above the open, close above the midpoint. Beautiful. But the artistic side to this trade still is telling you it's not a good time to do this. Okay? You have to apply all phases of this. We've got a good fundamental stock, blue chip in my opinion. We've got a stochastic below 20 telling you that it's time to, have a buy condition. We've got a buyer's bar, but we're missing that last element that tells you to get into this stock. Now, this is where I want to go back to the Unisearch real quick. Remember I talked about the Unisearch and I said that the stochastic has crossed above 20? What you could also use on the Unisearch is you could change this to where it's crossed below 20 in the past couple of days. And you can say in the past 5 days if you want. Now, let's run that scan. We got train, we still have Louisiana Pacific, and we still have now C limited. So if I run this scan, let's run it. I already did. Let's go ahead. Let me clear off some of my background stuff here because I don't want this to get confusing for me. All right. So we already know this guy here. Though we didn't look at train yet. Train is also a really, really good buying opportunity. Not ready to buy, but a good looking graph. You've got a market that's coming down, a really good high RS, high RV stock, or a high RS, high growth stock. Look, did the stochastic cross over yet? No. Do I care? Not really. I generally don't care because I'm not worried about those two lines crossing to give me the signal. I'm using the stochastic as a condition. It's below 20. It's a buy condition. Now everything comes up to the current stock price. Are we making higher highs? Yes. Are we making higher lows? Yes. Is our close above the open? Is it close above the midpoint? Yes. Okay. Now, this is where we can start getting into, the artistic side. Well, if I look at this right here, okay, you can certainly make the case that we are not above that trend line. All right. You can make the case that we're not above that trend line. I think that's a good case to make. However, here is what I would tell you in a trade like this. Would I take this trade as an aggressive trader? I probably would. And here's why. Look at the distance between the current bar, okay, and hitting that trend line. The current stock's at 376. If we rally into that trend line and stop, you're still looking at a good $15 move on Train Technologies. So what you would have to consider here is, are you aggressive? Are you conservative? If you're aggressive, we got everything we need. We got a stochastic below 20. We got price action ruling telling us the stock is ready to go up. We've got a trend line that's still a little bit above the market, okay? But we also have a lot of room to hit that. So this could go either way. If I was a trader, I would probably have no problem throwing an option strategy on this, maybe like a bull put spread if the market timing were in my favor, selling like a 360, 350 bull put spread. And earnings were, how far ago were earnings? A couple days ago. Okay, so that's good. Erwin, you said, is it fair to say that price action is king and needs to be positive before continuation on the stochastic rising above 20? Yeah, I would say that absolutely, that price action for me would be king. Price action is king. Now, the one thing I will tell you about running that scan that I just ran, the one thing I'll tell you about that is when you do it, when I ran the scan originally for price moving above 20, that's generally going to catch the market as it's starting to move back higher because the stochastic is starting to move back up. when you do the scan, and I'll just go back to the Unisearch here. When you do the scan, the way I did it now, where it's just crossed below 20 in the past 5 days, now what you're doing is you're looking for stocks that are getting ready ultimately to continue moving up. They're not necessarily moving up yet. They're moving up in their first phases. If I change this simply to it's going back above 20, now you're probably seeing a stock that has more of a, and I don't know if I can be able to draw it perfectly on this. You're going to look for you're going to see a stock that has more of a hook. You know, it's already moved up, kind of like I think Louisiana Pacific, right? Where it already kind of made a low, it's got 3 or 4 days into it, and now it's starting to move back up. Either scan is perfectly fine. Either scan's perfectly fine. This one will try to find you more of that hook where it's already started to come down and starting to move back up a little bit more. Whereas you look at a stock like C right now, the stochastic's below 20, hasn't crossed, but if you take a look at that thing, we got our first buying behavior bar pretty much right there. And there's really no trend line on something like C that I can even form. I mean, I could try, but you know, maybe that, and it's going to be even harder to form that on there. But look at that. I mean, that's a crossover that I would really like on C limited. That's the kind of stuff I'm finding. And you look at that and say, well, Ron, but the stochastic's not fully below 20. It's not crossed over. Honestly, I don't care. It's in that condition to where I'm ready to buy it. What else do I need? The market to move 3 or 4 more bars up and then finally get this thing hooking because it's lagging? I don't need that. I've got it below 20. I've got it looking pretty good. I can jump into this thing right now. Okay? I can jump into that thing right now. Let's go back to LPX. And yeah, you could definitely say, I think Michelle, you had said there's a positive divergence between the price and the stochastic 20. I would agree with that. You know, I would agree with that. It looks like, you know, stochastic is right here or even right here. Okay? And then finally kind of coming right back up. So that's a good thing too. Now, let me kind of show you another aspect to this. So what you got there is simply this. You've got stochastic, you've got trend line, and you've got higher highs, higher lows, and above the midpoint on a good high RS, high growth stock. Okay? That is really what I like to look for in the case of an entry for these things. Now, this is an aggressive entry. I haven't talked about support resistance yet, only because, you know, support and resistance is more of a, once you're in the trade, where could it stall? Where could it go to? Is there support and resistance up against my entry? Things like that. So I guess let me illustrate that real quick too. So if I go into this graph of LPX, I add my parameter. I go to technical analysis and I add support resistance. I don't change the settings of support resistance. So another thing I guess I should mention on LPX is there is resistance kind of heading into here too. You know, the stock is quite frankly sitting at a resistance level where we're at. Not only that, it hasn't come above the trend line. So that's another element I would add. Is there resistance on C? Not at all. In fact, that's the last close bar, so that doesn't count. C, the only resistance I see is up here at the 52-week high. That's fine. Then I think we also had TT. Here's TT. There's no resistance anywhere on TT that's coming into this thing. So when I say support resistance, what I mean is this. If you see a support or resistance level coming in and you're supposed to buy the market right there and there's resistance right there, that's a red flag for me. That's a red flag. Wait till you're clear. So out of right now from that scan, I really like Train Technologies. Again, I don't think Train Technologies has the highest chance to get back to the previous high because there is that trend line at 390. Again, I would watch that if I buy Train. And then LPX I would wait for. There's resistance. There's a trend line that's pretty close to where we're at. But C also looks pretty good to me. Stochastic's giving me a strategic buy. It's coming down. This is not identified as support, but we also got a little bit of support right here. Okay. We got buying behavior from Friday. This would have been a good stock to take an aggressive chance in on Friday. Okay. That would have been a nice aggressive move right there. So that is something that you can add really to any one of your bullish searches and add that in there. Okay. Now I want to show you one more parameter. This one is a little bit more aggressive, if you will. This is let me get back to my screen here. Let's go here. This is what we call mixed behavior. Okay. Now, the mixed behavior bar, this is a reversal bar. Now, there's candlestick patterns that do this too, but this is a reversal bar. Now, this bar right here, okay, this bar indicates that the market may rebound. So if I see a stock, and I'll just do it like this, I'll draw you a picture. I see a stock rallying, I see it coming down, right? Hasn't started going back up yet. If I've got the little graph on the bottom, I see the stochastic rising, I see the stochastic coming down here, just like I want to. That's the stochastic. Okay. This is the actual bar or the actual graph of the stock. Okay. What you're typically going to be seeing here is this. All right. What you typically are going to see here when you make that low before the market starts coming back up, this bar right here can sometimes lead you off with the reversal. And what it has two forms of selling. So we have a lower high, we have a lower low, but now the close is greater than the open and the close is greater than the midpoint. This is a reversal bar. And this is if you see this bar occurring and then seeing follow through. Now, you don't want to buy anything on this bar right here. You don't want to buy anything here. Don't buy it. Wait for follow through. From here, then you would want to watch the graph and you would want to see something like that where you come in with that buying behavior bar. Okay, that buying behavior bar. Now let's go back to VectorVest here. Now, see that bar right at the low? You zoom in. See that bar on SE right before the low? That's exactly what I'm talking about. Look at that guy. Lower high, lower low, close above the open, close above the midpoint. That's exactly what I'm talking about. Okay? That's the kind of stuff that you want to see. That's the kind of stuff that you want to see. You even saw it back here. Look at that bar right there. Now, stochastic was just starting. Let me put my date line on the bar. Stochastic was just starting to get that into that 20. Actually, it was still a little high. You could have waited a little bit on that one too. But look at that bar right there. Lower high, lower low, closed above the open, the midpoint. The next day, you got buying behavior. Now, you could make the argument, Ron, then the market didn't take off for another 4 or 5 days, and I would not disagree with you on that. But you can see that that's really where the movement started coming back up out of that reversal. Okay? That's really the key. Those reversal bars are very, 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 very nice to see, especially when you're looking for this bar right here. Okay. Now, another element that I talked about, I didn't really put much talk into this, but let me go back to my slides. Bear with me a second here. I tend to be like John Madden, if you ever watch American football, with like, you go here, and then this guy goes here, and then it's over here, and then over right there, but then right here too, and you want to do this. And then this guy goes here, then you get a touchdown. I tend to be like that. Rest his soul. I miss John Madden as a commentator. He was always fun to watch. Anywho, I didn't talk about the whole idea of deltas. So delta, this has nothing to do with options. This has to do with price. Okay? Because what I want to see in some of these scans, now this is completely optional. I'm going to go back and I'm going to add a couple more parameters to this scan. Now, as you start adding parameters, find out what you like, find out what you don't like. You know, the one takeaway I would say from this presentation is the buying behavior bars, right? Higher highs, these two scans right here, the 1-day stock high and above the midpoint, these are very, very powerful, okay? When you start looking at stochastic, that really is just more of a technical entry point when you're trying to find a stock that's coming into a profit-taking decline. Now, the next thing that you can do, and this is where you can go into price, split adjusted, and then you have delta. Now, all I really want to see is I want to see a stock that's moving up. Okay. So I can just say delta over the last 8 weeks. Okay. I want the stock to be moving up 1%. That's it. Doesn't have to be going up a ton. I just want to make sure that the stock is going up. Now, all of these scans, all of these stocks would meet that criteria. Let's just run the scan back. Let me do this. Let me look at a market timing graph. Here's market timing. Let's look at, I don't know, let's go back to like October 3rd, October 4th, when the market was kind of pulling back itself a little bit right there. So let's go back to like October 3rd. October 3rd. Okay. Let's run that scan. All right. So here's some stocks that came up on October 3rd. Let's graph them. Oops. Here we go. Okay. So October 3rd, let me back this up to October 3rd, right about there. Right there. Okay, then let's open it up a little bit. All right. So essentially what I'm doing is stocks are going to tend to trend, right? When the market's trending, the stocks trend. We all know that. But what I'm interested in here is I'm interested in the stocks continuing to go higher. What does that mean? Right? If you look, and I'm going to take this back to a 6-month graph. Look at ServiceNow. Look at ServiceNow. I want you to go back and look at every time the stochastic pulled below 20. Here, 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 well, not there, and here. Okay? Every time the stochastic pulled back below 20. What you're seeing is you're seeing a market that is making a low, a higher low, and a higher low. So the delta of the market trend is moving up. Now, I tend to use like 8 weeks for this to give me a good idea. And you can see that right there off of that, off of this on ServiceNow back on October 3rd. And by the way, I didn't choose this date. I chose this date at random, by the way. I didn't choose this date because I already did this trade on ServiceNow. Look at ServiceNow on October 3rd. Look at the prior bar. Lower high, lower low, close above the open, close above the midpoint. Like one of my late mentors told me, the thing I love about this is I don't have to make things up. These all line up for me by themselves. I don't have to make it up. It happens. And then look at what ServiceNow did. It popped right through there. Okay, popped right through there and it made a new high. If I go to the next graph, I don't know if all these graphs are going to work. Here's GGAL. All right. Look at this. Now, the stochastic wasn't below 20, but look, here's where the 52-week low came in, right? Stock went higher. It kind of had a dip here. It went higher. It had the real dip right here on October 3rd, and that's when you had your first buying behavior bar, right? Higher, low, and that's from a couple months prior. Now, you can spread this out a little bit more if you want to. This stock didn't work out as well. Actually, on October 3rd, that's weird that even came up because my stochastic, well, I think I had it above or something like that. But either way, the market did move up from that point on buying behavior on October 3rd on 1OK or OKE. Either way, it worked. So is this one. Here's where the low came in. Rally, low. Rally, higher low. Okay? And look at this bar right there. Lower high, lower low, close above the open, close above the midpoint. The very next day, did you have follow through? No, you did not. Don't do anything. The next day after that, boom, that's where you get into the trade. This one, October 3rd, this one didn't quite work out, did it? Well, I mean, not every trade's going to work out perfectly. It did rally on October 3rd, and that's great. Now, you could also probably make the case of a trend line here, of a trend line not breaking out of there. But even if you took that trade and it didn't work, hey, not every trade's going to work, right? But that's the idea of the delta scan. The delta is going to try to make it so you're looking at stocks moving higher, higher, higher. Okay. Now, I like to go back 8 weeks. You can even kick that back up to higher if you want to. In the Unisearch, we can go back maybe even 12 weeks, but I like 8. I like 8. And then another scan I like to do, same scan, price, split adjusted, delta, and I'll choose weeks, and I'll just choose 2 weeks. Because what this is going to try to do, okay, greater than 1%. It doesn't, again, I'm just looking at 1%. I just want to make sure it's going higher. Okay. This one, all those same scans should probably, actually, the only one that comes up is Halozyme in this one. But what this tries to have it do is say, you know, if the market, and I don't like to run these things concurrently because it can do this. What I want it to do is if I'm looking at a stock that's doing this, it's going up, it's coming into a stochastic, but I'm starting to see trends where all of a sudden it's bouncing. You know, it's kind of doing like this. The 8-week scan is going to pick that up. The 2-week scan is typically going to wait until it bottomed and then came right back up. So I wouldn't run those things concurrently at the same time. I would probably recommend just an 8-week scan, or if you want something a little bit more tighter, a 4-week scan. But I think 8 is probably where I would send most of you on that. And again, the idea behind that whole technique is just to make sure that the stock is consistently moving up. You know, like you look at C, I look back at a 1-year graph. Here's where the low came in, right? We had a stochastic buy right here. Market moved up. The next stochastic buy needs to have a low price higher than the prior stochastic price. If it starts moving down past that, that's where you don't want to take the trade any longer. You want to make sure that the market is continuing to make higher highs throughout the process. Okay? That's the high, that's where that goes. All right. And then Stuart, yeah, you kind of you made the comment to VS about that. The market's now to confirm down. I to wait until at least you get a primary wave up before buying. Yes, I mean I would tell you the same thing. You know, always heed market guidance. You know, buying good stocks when the market's rising. You know, yes, I'm showing you these things. Yes, there are going to be some scans here. And as I always tell, I tell my option students, you know, what I try to do for my option students is I put everything what I call in a layer of probability, right? What does that mean? A layer of probability, or peeling back the layers of probability. So how do you get probability in trading? Number one, have VectorVest. That helps. Number one, really look at market timing, right? Markets tend to follow market timing. Stocks tend to follow market timing. Confirmed wave, whether it's a DEW up, confirmed call up, some sort of a bullish market timing pattern. Then take it to the next layer. Find good fundamental stocks moving up. Check. Find good technical patterns that say it's time to buy. Check. So what you're doing is you're layering probability. So on C, this trade looks like a good technical trade. Doesn't have market timing behind it right now. That would be your only downside. Could C still rally? Of course it could still rally. But you are pulling back some of the layers of probability on this trade. And then when I get into my option stuff with my options guys, then I start saying, okay, now we do a bull put trade or we do a diagonal trade. That way we can make money if the stock goes up, down, or sideways. You know, you kind of get the idea from there. But I'm not here more as an options guy today. I'm here more of as how I select my stocks. Okay. I mean, if you really wanted to see how I throw an options trade on this thing, like something like C, I would probably my first inkling on C would be to do like a $90, $85 bull put spread. Something like that. That would be my first inkling to do on C Limited, right? Take a look at the stock. It's at 95. If I put a bull put spread on at 90 on C Limited, I can make money as long as the stock stays above 90. Just to throw an option trade in there. You know, I can't get away from options trading. I'm an options guy. What can I say? But,
Hey,
you know,
Ron.
that trade wouldn't be too bad.
Hey, Ron.
Yes.
Not that I ever want to stop you, but
I hear you, man. I hear
I
you.
think we're going to have to release these folks to enjoy the rest of their weekend at some point. Hopefully, is that a good place to
Yeah.
start?
Yeah. That was,
To
I think
stop?
that's a good transition. Yep. Absolutely.
All right, perfect. And I know Lawrence had a question in there. I'm just going to steal the share back
Oh,
here
sure. Go
for a
ahead.
sec. And not sure if, I know some folks tried to answer Lawrence's question. Not sure if that happened or not, but Lawrence, you're asking about changing the bars because Ron uses open, high, low. So you can see on my screen here, if I right click in the price selector here, change type, we can go from area, line, open, high, low, close, right there. All right, so let's jump back here. Thank you very much, Ron. I could listen to you all day long. That's one of my issues with excellent presentation. I think very well received by everybody there.
My
We
problem, Rick, is I could speak all day long.
Yeah, folks, just so you know, I asked Ron, how much time do you need? He told me 20 minutes, I think, initially. All right. So we do have a few things we want to make sure we mention before we close out, folks. You do know the Tampa 2 Day is coming up. Here I have the link for folks to register for the live stream. No charge for the live stream. You can see the dates there, January 10th to 11th, 2025. Coming quickly. We're already into November. And you can see at least some of the lineup there. I think there might be some folks missing, but hey, we've got Ron in there. If you want to hear more from Ron, he will be there as well. All right, so you can see Stan and Les Masonson added in there as well. Okay, so www.vectorvest.com/stream to register for that. Free, so you definitely want to do that. The other thing I want to make folks aware of is we do now have a US Power Hour Fridays at 2 p.m. in the new community room. So you can see the link for that there, vectorvest.com/VIC. Okay, and you can also see that in the lineup here on the welcome mat. So you can see we've also added the Australia members Q&A. So their weekly Q&A is now in that community room as well. And there you can see the stock analysis power hour. So you can see everything that's in there so far with the date and time. All right, and I've got the links there as well, both the link to that room and the email address if you are having issues gaining access to that room. Something else to keep in mind, clocks for those who do adhere to daylight savings time, clocks will be going back. Whether you call it tonight, tomorrow morning, we'll be going back Sunday, November 3rd at 2 a.m. So this is also important for folks who don't adhere to daylight savings time. Keep in mind that all of the VectorVest sessions will now be at a different time for you if you're not adhering to daylight savings time. All right, want to make sure everybody's aware of that after this weekend. All right, and as usual, folks, we would like to thank you for coming out and spending part of your weekend with us. As you can tell, we enjoy it. We hope that you enjoy it. We hope to be providing a lot of value for you folks out there. So we want to say thank you. And for all those saying thanks, we'd like to say you're welcome as well here. So as usual, folks, don't hesitate to reach out to our product support and training folks. If you do have any issues, any questions, need any help at all, 1-888-658-7638. As I mentioned, this is being broadcast on the VectorVest YouTube channel, so the replay will be available right after the broadcast at that same location. You've got the support email down below. If you are looking for slides, you can email support@vectorvest.com, and they'll provide a copy for you. And you also have Ray Clark's email address down there, rayc@vectorvest.com. If you have any ideas for upcoming international online forums, don't hesitate to email Ray and let him know. All right, so folks, again, I'd like to thank everybody for coming out. Have a great rest of your weekend. We'll see you back trading next week. But that's it for now. Bye for now, folks.